Hi, this is Shane with the Rational Trader. It is Wednesday, the 3rd. My result was 0 because I didn't take a trade at all today. So we're operating with sort of careful models, models that require strict, very clear signal, and very conservative entry offsets. And so what I did is since I took no trades, what I did is I then used the same model, but ran it with a more aggressive entry, and that's minus 2.75. So that's reasonable. When it immediately hits, max loss is when you know that okay, it's still too volatile to be aggressive. Let's take a quick look at it, and then I might run it again with the less strict model to see what that looks like. So we don't start till 7:05 when the market is volatile, so that's here. We immediately take a short. All right. So what happened in real time is the order was placed up here and didn't get filled. Okay. So in this simulation, I'm using a one tick offset, and you catch a little 5-point move. So 5 points and then 2 1/4 there. This long here, you get enough to move the stop so you take a half loss, or a third loss, I guess. We're going to come back and look at this in a minute. Nothing there. And then there's another get long right here off this 127 that takes a full loss. And I think that's it. Yeah. Okay. So now let's go back and just kind of look at where is the system looking to take trades. So I basically I like what I see here. This is the right place. Okay. This is the right place to be looking. It didn't find anything here. Actually, that's not true. It finds a 287 short right there. You don't get filled. So even with an aggressive entry, the order gets placed right there. You got to get filled on the next bar, and you don't get filled. So that actually finds the top there. That's nice. But it thrashes around enough that you're going to end up scratching out. Let's see here. So then it pulls back up to here, and any bar that's orange is a bar I'm taking a look at to see if I want to enter. So I like what I see there. This is because you're near this low volume node here. And that looks like you can see that resistance level or that support level that's been set there. So you're like bouncing off of that. So because enough volume traded above, this becomes a low volume node, this price level. And then when you get near it, the system will take a look at it. And then these flags are in the way, but as you approach the edge up there, another bar goes orange again, another chance to take a look at it. Same thing here, right? So you're pulling back down to that low volume node, and then you're getting the signal long, looking for it to retest that value area edge. We will sometimes see it bounce around like that, and that's kind of an ugly, thrashy, sideways, choppy movement to get caught in. Inside the value area, we don't try to do anything about that. Outside, we'll use the waves to avoid chop, because we don't see it that often is why. The market either does what you see right there, it blows right through that level. Whoops, shoot. Hit the wrong button, sorry. It either blows right through that level, or it bounces off of it. We get down into here in where the point of control is. And so as these bars kind of poke their heads far enough away from the point of control, they go orange. So and because they're near that low volume node, the system's taking a look. It says don't do anything. This is where it gets interesting here. You can see as you sort of skirt this value area edge. All right. And so I'm concerned about this as a problem. And as a result, I'm only using the more complex price patterns at the edge here, as opposed to the simplified ones at the low volume nodes. But one thing it occurred to me to try is, or at least to think about, is using a different entry offset when you're at the edges. So be aggressive at the low volume nodes, but at the edges, be more conservative. So I'm thinking about that. I'll probably set up some tests and see what that looks like. Okay, so then we fall below, and you see this striping showing up now. That's saying the market is choppy to the high side, don't take longs. Here it's choppy to the low side, don't take shorts. Here it's choppy to both sides, don't get in at all. We do that when we're outside the value area. Here we come back in, so at the edge here. This is applying this chop avoidance is being applied. When you're basically outside, you have to be like 10 ticks outside this imaginary line that's around that edge. Okay, so these bars here, we'll take trades on these bars because we're inside that zone. Let's see. You like what you see here. You're pulling back to the value area edge, and your expectation is that the market's either going to bounce off that or blow through it and revisit the point of control. So I like that we're looking there. This is exactly the right place to be looking. This feels the one I just circled feels a little late. It's happening because that's a low volume node, this price level right here. And so the market hasn't spent any time there. And as a result, okay, let's take a look. The market's this is I like to think of it like the magnets when you put the same poles together, how they push each other away. That's what these price levels are like. And here we come back down to the edge, and it's the same thing. You see how sort of noisy and ugly it is? And so I want to be more careful here at the edge, and I am in terms of price action and predictions, but I'm thinking about also changing that entry offset. That might be something really useful. It may allow us to be a little bit more aggressive, because one of the things you see happen is the market will come down to it'll move to the edge and just very quickly bounce off of it. You're typically thinking of it like this, where it bounces back up, to revisit the other edge. But the opposite's true also, where it's below and it comes up and it just immediately bounces off. And that looks very similar to how low volume nodes act. And so I'm thinking about, can I use the simplified price action patterns for the low volume nodes at the edges? And it didn't work very well. And the reason is because of this kind of stuff. You just get chopped to pieces here if you get too simple, right? Let's see. Again, this is this is exactly the right place to be looking to get in. You come down to the edge. There's also a low volume node there. All these numbers mean the system's making predictions. The predictions are coming back, don't do anything, because our requirements are really strict right now because the market's been so volatile. I'm curious. I'm going to run this with a 30-tick model in just a minute here to see how it behaves. Let's see. So we come down to the edge, and here we break through it, though it is a little bit ugly. We break through it, we pull back, and then fall, pull back again. This is exactly what I was talking about earlier, how you see it come up and then it just immediately falls, right? It doesn't spend a lot of time hanging around up there. And so in this case, there's also a low volume node there. So you're actually getting low volume node prediction. So that it works out for you in this case. But if you want those more aggressive, simplified low volume patterns at the edge, you can get caught in some ugliness, and we're trying to avoid that. This is calling for shorts here, which is kind of what we've been talking about. Pull back up to the edge and then fall back through. The system's not doing anything. One, because you don't get filled, but two, because you see the red background. It sees this. It sees this and goes, look, you've got a support there. It won't take a trade if you're too close to that support. It wants to. It requires that you be far enough away from it before you get in. So you need enough room to get filled and get to scratch, and before you get kind of near this area. So near would be within a bar. You can see the problem. Your entry would be something like that. That's not really enough room to work with. And so that's why it's set up that way. So we only do this when we're outside the value area, because since we're outside the value area, we don't have as much volume to work with to understand, who's gotten in where. And so we use how the market is setting levels to help us understand if it's safe to get in or not. And you can see this is pretty much choppy, ugly death here for traders. The amplitude is bigger than normal because the market's more volatile, and so you can convince yourself that you should try to get in and do something here. But the reality is that this is pretty choppy and ugly. There's no direction here at all. You got to like this here. Come down to that low volume node. It's been sitting there a while, and make some predictions. This prediction here is a short, which is not what we want. We end up not doing anything because the market continues up. So our verification requires a down bar. Interesting. Okay, so I'm going to run this with the more kind of a normal market model, but with a conservative entry offset, and let's see what that shows. So the volatile market model, the be careful model, didn't take any trades today with a 5-tick offset. With a more aggressive entry, lost 3 points. Not bad. A reasonable amount. So let's put the normal model in place and see what happens. So I'm going to set that up right now. Now for members, you can see I'm changing to the 30 model here from the 45. Okay. So let's launch the server and then we'll kick it off. Okay. There's no need for you to wait through that though. I'll stop the recording. All right, and here is the result, minus 15. So that's a max loss. So the choice to stay with the model that is stricter is sound. All right, let's take a quick look at what happened. Gets short here, which is the right thing to do, but the market's just ugly. All right, so you end up taking a small loss. You get enough to get to move the stop, so you take a 5-tick loss there on 2 contracts. Here you get long, and the same thing. You get enough to you get 10 ticks or more. So you get 10 ticks, but not 15, basically. So you move the stop, take a 5-tick loss on 2 contracts. Here again, it's the right thing to do. You're getting short, but it's too, the market's it's a little too volatile. So actually, you get stopped out to the tick right there. That's pretty painful. So another small loss, and then let's see, try to get long there, and that's one swing too early. Take a full loss, and I think that's it. We don't even get into this ugliness here. Yeah, that would be max. All right, so I'm going to stay with the cautious model, and until I see a change in the behavior of the market.